Hello everyone, today is Monday, December 1st, 2025, Eastern Time. Welcome to Panda Finance. Let's take a look at the top 10 global corporate news stories from the past week. Here are the details. Google's third-generation Gemini surges ahead of rivals. Google's latest large language model, the third generation of Gemini, has eclipsed ChatGPT and other peers on widely followed industry benchmarks, earning recognition as the most capable AI chatbot currently available. The release has once again shaken Silicon Valley's competitive landscape, turning Google from a fast follower into a clear frontrunner. Driven by its deep infrastructure capabilities and native multimodal approach, Google is rapidly closing in on the next valuation milestone. The company is now worth $3.86 trillion and is on track to become the fourth member of the $4 trillion market cap club. Investor enthusiasm for Google's AI tools, cloud franchise, and in-house chip development has pushed the shares sharply higher in recent months. The renewed momentum contrasts with the retreat seen in the broader AI complex. With competitive pressure from ChatGPT easing and users returning to Google Search, Alphabet's monetization engine appears intact even as market leaders diverge sharply in performance. Nvidia wipes out $700 billion in market value. Nvidia shed 12.6% in November, erasing roughly $700 billion in market value, as investors grew increasingly uneasy about frothy AI spending and the company's circular investment links with startups such as OpenAI, firms that depend heavily on Nvidia's chips. Concerns intensified after a report suggested Alphabet's in-house AI processors are making rapid progress, potentially eroding Nvidia's market share assumptions. Nvidia's valuation is predicated on its ability to maintain dominant share in data center AI workloads. Any loss of ground will force investors to reassess its long-term growth trajectory. Just weeks after briefly surpassing a $5 trillion valuation, Nvidia has retreated to roughly $4.3 trillion. The company maintains that its technology is still a full generation ahead, even as major customers explore alternatives. Meta is reportedly in talks with Google to deploy its tensor processing units in data center operations, further highlighting the competitive threat. AI trade cools as SoftBank takes a heavy hit. The months-long frenzy around artificial intelligence stocks is losing steam, and SoftBank is bearing the brunt of the pullback. The Tokyo-based technology investor has plunged about 40% since peaking late last month, wiping more than $100 billion in market value. The whiplash reflects shifting sentiment toward AI bets and SoftBank's perceived exposure to OpenAI. With Google's rollout of Gemini 3.0 raising fresh questions about OpenAI's competitive position, analysts say SoftBank's dramatic slide underscores its sensitivity to a single AI ecosystem rather than broad weakness in the sector overall. Underscore 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 TSMC sues former executive who joined Intel. Taiwan's semiconductor manufacturing company has filed a lawsuit against a former senior research and development executive who recently joined Intel, the company's US-based rival, in a move to bolster its grip on the global chip-making industry. TSMC alleges the former executive violated non-compete agreements and may have disclosed trade secrets following his retirement from the company this summer. Intel denied the allegations, saying it maintains strict internal controls prohibiting the use or transfer of third-party confidential information and has no reason to believe any wrongdoing occurred. The case highlights intensifying global competition and growing scrutiny around talent movements within the semiconductor supply chain. Underscore 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 Omnicom and Interpublic complete landmark merger. The largest acquisition in advertising history is now complete. Omnicom Group and Interpublic Group announced that the European Commission has granted final approval for Omnicom's purchase of Interpublic, clearing the last regulatory hurdle. The deal formally closed on November 26. The combined company becomes the world's largest marketing communications network, with more than $25 billion in annual revenue, and will trade on the New York Stock Exchange. The merger reshapes the global advertising landscape at a time when the industry faces accelerating shifts toward data-driven marketing and AI-powered content creation. ADNOC's acquisition of Covestro set to close. German chemical producer Covestro and XRG, formerly known as ADNOC International, have secured final approval from Germany's Federal Ministry for Economic Affairs and Climate Action, satisfying the last remaining condition for ADNOC's takeover of Covestro. The deal is expected to close in the coming days. Under the agreement signed on October 1, ADNOC will acquire all outstanding Covestro shares for roughly €11.7 billion and assume an additional €3 billion in debt, bringing total deal value to about €14.7 billion. Covestro will also issue new shares equal to 10% of its capital, raising €1.17 billion from ADNOC.XRG, the low-carbon energy and chemicals platform backed by Abu Dhabi National Oil Company, aims to build a global presence in specialty chemicals. ADNOC will maintain full ownership and control through its 100% stake in XRG. Underscore 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 Volkswagen says China can cut EV development costs in half. Volkswagen said producing fully electric vehicles in China can slash development costs by as much as 50% compared with manufacturing comparable models in Germany. After a series of investments in local operations, the company is now able to design, test, and deploy new models entirely outside its home market for the first time. The automaker plans to introduce about 30 electric vehicle models in China over the next 5 years, betting heavily on localized R&D and faster product cycles. Cost advantages come from an efficient Chinese supply chain, lower labor expenses, and streamlined battery procurement. The comments come as Volkswagen struggles to execute sweeping cost-cutting measures in its German factories. Employee departures through retirement and severance have slowed sharply in recent months, leaving the company about 10,000 positions short of its 2030 reduction target. Airbus grounds 6,000 A320 jets for urgent software replacement. Airbus said roughly 6,000 A320 family jets require an urgent software replacement after an incident involving a JetBlue flight in late October revealed that strong solar radiation could corrupt critical flight control data. On October 30, a JetBlue aircraft flying from Cancun to Newark experienced an unexpected altitude drop that injured 10 passengers. Following a technical review, Airbus instructed operators on November 28 to immediately halt operations for affected aircraft until the software is replaced. The grounding affects more than half of the global A320 fleet and has already disrupted hundreds of flights across Asia and Europe, while threatening peak travel schedules in the United States. Airbus executives apologized for the sudden recall, which comes as the A320 family overtakes Boeing's 737 series as the world's highest delivery commercial aircraft program. Huawei unveils Mate 80 line in Milestone for HarmonyOS. Huawei launched its Mate 80 smartphone series and the foldable Mate X7 on November 25, marking a major milestone in the maturation of its HarmonyOS ecosystem. Senior executive Richard Yu said HarmonyOS 5 and 6 now collectively power more than 27 million devices, as the platform emerges as a third alternative to Android and iOS. Huawei said it has released more than 10 foldable phones since 2019, with cumulative shipments exceeding 10 million units. Separately, Huawei Cloud announced a leadership reshuffle. The former head of the company's data storage division will become chief executive of Huawei Cloud, while his predecessor shifts to chairman. The cloud business will reorganize into 5 major product lines spanning infrastructure, data and AI, databases, security, and HCS. Underscore 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 Meituan swings to large loss as local commerce competition intensifies. Meituan reported third-quarter revenue of 95.5 billion yuan, up 2% from a year earlier, but swung to a net loss of 18.6 billion yuan after posting a profit in the same quarter last year. On an adjusted basis, the company reported a loss of 16 billion yuan, compared with a 12.8 billion yuan profit a year ago. Revenue in the core local commerce business reached 67.4 billion yuan, but operating profit turned negative amid intensifying competition. New initiatives generated 28 billion yuan in revenue, up nearly 16%, with losses narrowing to 1.3 billion yuan. Chief Executive Wang Xing criticized the ongoing price wars in China's food delivery market as a destructive form of competition, saying low-price, low-quality offerings create no long-term value for the industry. He reiterated Meituan's confidence in defending its leadership in on-demand logistics and establishing sustainable economic value across its ecosystem. Thank you for tuning in to today's financial news. We look forward to seeing you again.